So what's up guys? Welcome to today's video. This will be a continuation of the how to read price action episode, and we're going to be looking deep into price action in previous week of what really happened and what to expect in XAUSD, that is gold. And this is not really I won't really recommend this for beginners, but if you've been in the trading space for quite some time, or if you are uh, uh, understand or you're familiar with liquidity, and maybe ICT concept, then that would be really, really good for you to watch this video. But regardless, even the retail traders can just play part in this, and let's get to it. So last week, this on a weekly candle, and last week we see we kind of rejected pushing higher, but prior last week we had a serious drop. And as you can see right now, what you have here is a bear market. Is a bear market in motion. And this being said, this is a breaker right here. This is a breaker right here. And there's another also, breaker right, below. Let me mark this properly. Just a minute, just a minute. There's a break. Okay, this is a breaker right here. Meaning that price might want to push way higher around this area before it drop down again. But from the look of it, gold is kind of wanting to push lower. From how I'm seeing things here, they see these inefficiencies over here. I think they've been uh, played around for quite long. Then over here we have we would say this is a breakout structure right here, and we it is now being backed by displacement and a gap. This is now a gap. We have a weekly bear gap. Most people, almost traders, don't really pay attention to the weekly time frame or higher time frame. So they only trade 1 hour, 15 minutes, and 1 minute candle, which is okay. But if you understand generally what's happening on higher time frames, it becomes way easier for you to be able to move around this market. So you see over here, we're kind of displacing lower. I'm gonna be removing these markings that I had previously. I think this was my previous video about price action and so on, and I'm just gonna remove them so that we can be able to focus on the new move that the market has been given. So first thing first, I want you guys to understand something. So I can be bullish or I can be bearish on the market. And most people usually feel or think that when I say that I'm bearish, I'm gonna stay bearish forever, or I'm gonna stay bearish for a couple of days or a couple of hours or a couple of minutes. I usually change as the market changes. If, for example, if I'm trading on, maybe let's assume I'm trading on on hourly time frame, and let's assume that I'm bearish right now, or maybe in the next let's assume right now my analysis is bullish or bearish. If price does something here that antagonizes my bias, I'm gonna switch immediately. So most scenarios, this requires real-time monitoring of the markets. You have to be there to see this. This is why sometimes I don't like giving signals because it is just too chaotic. I'll tell you guys, I'm planning to buy over here, and everybody will be waiting to buy over here, and go in hard and have a leverage and stuff and so on. Then when they lose, they start blaming you because they don't know how to read price. Because if I say that I'm bullish, as I'm only bullish as much as this PDAway is not disrespected. If this PDAway is disrespected, for example, this fair value gap, this bullish one, I'm expecting price to drop down a little bit towards this level, then you push it higher, or maybe from this level or the consequent encroachment of that gap, then you push it higher. But something can just happen. You see, right now we have geopolitical factors. Something can just happen all over. If something happens, I'm not responsible for that. You have to know how to read the price. If we displace aggressively, disrespecting this gap, then automatically I'm not looking for buys. I'm looking for sells. So as much as I'm planning to buy down here, I'm going to be looking how does the hourly time frame play around this area. If it does something that I'm not interested in, then I have to switch it off. So that's how I usually, that's why I find it quite hard, when giving signals, because I could tell guys, I'm going down. But in the next couple of minutes or even hours, I see something that's happening that's not supposed to be happening. I switch my bias immediately. So I don't have time to post this or to, to let people about this. Like, you know, tell people about this. So this is why I expect you guys to pay so much attention in whatever I'm trying to teach here, and I'm doing this for free so that you guys can be able to understand exactly what's going on here. So we do have a breaker, we have a fair value gap on a weekly time frame. This is powerful, guys. This is powerful on a weekly time frame. So this is very, very powerful that you have to be very careful with. So I'm gonna be marking out this weekly fair value gap, this one right here. This is a bearish one. Definitely price has to push back in there. So yeah, we can be looking for buys. So apart from that, I want us to take a look. Last week we purged a liquidity down here. This liquidity was over the week of 2nd February. This one here. We purged it. Now the question is, how did we react to this level? We respected it. And apart from that, we even tapped some PDA down here. This was a bullish fair value gap right here. You see, we tapped it and price rejected very, very well. Perfect. We pushed higher. So over here, we have two scenarios. As much as this gap is opposing our buys, this our PDA to target. This is our point of interest. This is what you're going to be targeting once we start buying from this level. Then once price reach this level, we're going to be looking at it like, did we create new bullish PDA as we are going higher? If we have weekly PDAs that are pushing price higher, once you attack this one, then you disrespect this gap, then definitely we're going higher. Gold is going back to all-time highs. But as long as this bearish PDA is still over here, existing over here, then price is likely to continue dropping. Okay, now let's take a look at this closely. Once this weekly candle took liquidity over this one, tapped down there and respected it, closed back in. Okay, so once it closed back in, unfortunately, we do have opposing PDA. This opposing PDA is opposing buys, meaning that if you buy over here, know that you have a drawn liquidity up here. This way, you're supposed to exit or from this consequent encroachment. Also, I want you to keep in mind that we've had a breaker, this one. We also have another break of structure right here. So this is a very tight scenario. This price was supposed to be giving us higher highs, higher, but all of a sudden we're starting to put lower lows because this is for example, this is a higher low. Then now we have a lower low. This was not supposed to be happening. We have a higher low compared to this one, but now lower low. You see that? This is a change in market structure. So now if we move into a lower time frame, for example, like daily, let's see what's happening. As you can see, that weekly PDA that I just marked, that bearish one, is exactly where we have daily PDAs. You see them? We have a daily gap there, daily gap there. These are all bearish. So when we came down here, we took liquidity over there and the price respected it and the next candle closed back in. So what do you expect here? If I was a swing trader, I would have bought gold from this level right there, put my stop loss on this low and target this high up there. That's 1 to 2 hour. This is now when you want to go heavy on capital and you want to like you don't stress. But since we are day traders, I'm a day trader, I would be looking for buy opportunities once this candle had taken liquidity over and I've seen how it closed. I would be looking for buy opportunities towards these opposing PDAs. So once price is within this opposing PDAs, I'm going to be asking myself a question. Do we disrespect these PDAs and do we have new PDAs created, for example, fair value gap supporting it? In this scenario, as you can see, we have breakout structures even on daily time frame, meaning that gold is very bearish. Gold wanna go down, okay? And you see where we might tap here. This is just a primary target I'm looking towards to, but definitely over here and possibly down somewhere down here. So gold might go back to 3,000, 300. It definitely can because you see the way gold has been moving, let's say this year and last year has been really, really crazy. You see, this is 2025, and see how 2025 has been. You see, all this is 2025. This is all last year, all last year. Take a look at this. You see how gold has been very, very crazily moving up in the past year, and also this year has been crazily going up. So we might have, and you see, we have World War III, looming around, and we have a lot of geopolitical factors, going on in, and this might just make gold reprise a little bit before it push back higher. It's the same thing with Bitcoin. Bitcoin, it's also trying to play some moves in there, and with repricing and so on. So this is what's happening with gold right now. So I'm expecting us to push a little bit higher, tap into this period range right here, Once we're in here is when I'll be able to decide whether we're continuing to buy to all-time highs or we're going down. But from the look of things, gold is likely interested in pushing lower, as much as these PD rates do still exist. Moving closer into a hourly time frame, when you open the market, this is what I expect to see. I'd like to see either a gap up as price push higher or we drop lower into this PW right here. Price come back down here, then you push higher. So if you're a day trader, you would just put a position from around there. Your stop loss just slightly below this low right here, not really that far, just down there. And you're going to be targeting the consequent encroachment of this hourly fair value, fair hourly weekly, not hourly, I mean weekly, bearish fair value gap right there. This one 1 to 8 hour and possibly probably we might just fail it completely, but I'd like to play around the consequent encroachment just to see what happens here before making any decision. So this is likely to happen in the next this week we are to begin. And once you push in there, that's when I'm going to be looking at what's will happen. So apparently I'm short-term bullish towards this speed array. So once we're in this speed array, I'm going to be looking at, do we have anything like happening that I can pay attention to. So exactly what I've been teaching you guys, uh, how to trade this scenario in this scenario isn't really that complicated. I'll give you an example because I always have to give example of how it happens. So, for example, on Wednesday, I had some shots on gold. If you take a look at my channel, I have some executions. So, why did I have these executions? You see, we had price was creating higher highs, then all of a sudden we change. We have a change in market structure shift, and we started creating lower lows, right? And we had a gap somewhere here, this bearish gap. This was a signature that big institutional involved, and the price went back in there and dropped in again and created this period away. So this period was really important for you. So price came back into to reprice it, and that was entry towards this help. That's why I took those helps, right? And it's also the same thing up here. If I'm looking for to enter this trade, we currently this is bearish market. We expect market to continue creating lower lows, but all of a sudden it starts creating higher highs and higher highs and higher lows. So that's not really a bearish trend. So we look for opportunities to buy. For example, we wait for break of structure, with displacement. Then we enter on the retest of the displacement. For example, that happened on this. So some people would literally call this retest. I don't know. Is it support? Yeah, some people would call this support level, price climb back to support and so on. But I don't use the retail concept regardless. So that's much about this. So see you guys in the next one. Make sure to like, subscribe, and keep in touch. Let me know what you think about this content, what you'd like me to talk about in the next video, and cheers.